So this is a topic that we are going to look at. It's a short topic, not a long topic. So as the name suggests, analysis of financial statement. We all know financial statements or the components of financial statement, and we are going to see how do you analyze the financial statement, some of these financial statements. Some of the components of a financial statement are like one. Who can give us one component of financial statement? Component of financial statement. I'm posing a question to you. Components of financial statement. What are some of the components of financial statement? Name them very fast. Components of financial statements. I'm giving you 1 minute to name them. Component. Up to this point, I expect you to differentiate between the component. We have different components, and those components are the ones that we're going to analyze. Okay, I can maybe help you to state one. One of them is the income statement. When we talk of income statement, that is a component of financial statement. Who can give us the rest one or the next one? Who can give us the next one? Balance sheet. We are naming them. Cash flow statement. Thank you very much. Yes, cash flow statement is a component. Another one. We have statement of changes in equity. I don't know whether you've ever heard about that. We shall look at a topic where we shall see how we prepare that statement of changes in equity. And then the last one that is not very common. It is notes to the financial statement. Therefore, as we are talking, we are saying that analyzing the financial statement we have highlighted. How now are we analyzing this? It is easy. For instance, say that I have a company here. I want to know its performance in the past 3 years. How do I get to know that? I'm going to ask the management to provide me with the income statement of that company, and as well as the balance sheet. Or I'm going to ask them to give me the trial balance with everything. I prepare the income statement from the trial balance, and then I'll be able to prepare the balance sheet. After that, I'm able to analyze the performance of that company, maybe for the last 2 or 3 years. For instance, under the income statement, I'm able to compare what was the revenue in the year 2022, for example, compared to the revenue of this company in the year 2023. That is the essence here. Comparison. There is that comparison. So if 2022 revenue was higher compared to 2021, as a financial analyst or a reporter of this financial statement, I'm going to advise the company of what they ought to do in future. In order to either maintain the revenue at a higher position, or generate more revenue compared to the existing revenue. And we do the same for each item. under the income statement. What is the next item? What is the next item that you think we should look at when we are dealing with the income statement? I've mentioned of revenue as one of the items that we can determine and see whether there was a change in between the specified years, which is another item under income statement. I know you people understand the format of income statement. Now, give me another item that we can look at when analyzing this financial statement. And specifically, we are talking about the income statement. Celestine-CPA is giving us purchases. Celestine-CPA is telling us that purchases is another thing. Purchases is another thing that we should look at. And identify what happened. And remember purchases. There's a way I can relate that with the cost. Let's say cost of sales. I can relate that with the cost of sales. Of course, purchases is found in here. Whereby we do take our purchases, we add inventory, right? Purchases, we add opening inventory, right? We add opening inventory, and then we less what? What do we less? We add opening inventory to get our cost of sale, opening inventory. I want you people to be very, very ripe on this. Then we less what? Someone who is telling us, what do we less? Closing inventory, right? Let's closing. Let's just call it closing inventory. This is a very good item that you have given us. Very good item that you have given us. Yes. We shall be looking at our cost of sale. The cost of sale will always affect our gross profit. The cost of sale will always affect our gross profit. Assume we have a higher cost of sale in a certain year compared to another year. For example, let's say I have 2021 and 2022. The cost of sale for 2021 is the cost of sale. Let me start with revenue. The one I told you about. Revenue 2021. I had a revenue of maybe 100,000. Sharing being in 1,000. 100,000. And then in the year 2022, I had a revenue of maybe 200,000. 200,000. Which year did our company perform well? Okay. Among the 2 years, this is one company, maybe Safaricom Limited. This is one company. This is the financial statement for the 2 years. Which year did our company perform well in regard to revenue? Remember, here we are looking at a specific item first. I want you people to understand from the word go, so that you're able to identify what we are trying to say here. So which year did our company perform well in regard to revenue? Waiting, and we said that it's always better to attempt. So 𝐂𝐚𝐫 is telling us in the year 2022, Safaricom Limited performed well compared to the year 2021. That is very correct. Because I can say if the revenue for year 2021 was 100,000, and then 2022 we got 200,000, that means even we made there was an increase. There was an increase. We shall see the trend. We shall see the trend or the percentage increase for such a profit. Then we go to cost of sale. Cost of sale. Assume in this period, under this 2021, we had cost of sale of let's say 50,000. And then this we had a cost of sale of 150,000. I want to show you how the cost of sale do affect our revenue. How the cost of sale do affect our revenue or sales. Do affect our revenue or sale. For instance, in this case, what will be our gross profit? Remember, for you to get the gross profit, you have to take the sales minus cost of sale. Sales minus cost of sale. So what is the gross profit for the year 2021? What is the gross profit for the year 2021? What is the gross profit for the year 2021? What will be our gross profit? What will be our gross profit? It is 100,000. 100,000 subtract 50,000. 100,000 subtract 50,000. So our gross profit here is 50,000. Is 50,000. What about the year 2022? Can see is 200,000 minus 150,000, which will also give me a gross profit of 50,000. You see now, even if we got a higher revenue in the year 2022, even if we got a higher revenue in the year 2022, that means our expenditure or the expenses were higher. The cost of sale, the cost of good for sale was higher in the year 2022, and that leads to gross profit being the same. Gross profit being the same for the 2 years. So there is an effect of a higher cost of sale. There is an effect of a higher cost of sale in the income statement. And when analyzing these, we shall be using some methods. For instance, we shall be using ratios to analyze. We shall be using a method known as vertical analysis or common size analysis. Then horizontal analysis or trend analysis. When we say over horizontal, we are looking at the trend. We shall be looking at that. We shall be looking at that. So class, are we together up to this point? Are we together up to this point? Like to get your confirmation whether we are together. Okay, thank you very much. So let's do something. Let's write something. So we write something and say, for the purpose of decision making, for the purpose of decision making, there should be analysis. There should be analysis of financial statement. There should be analysis of financial statements. So anytime we want to make decision, for instance, now you can advise this company. You tell them that you're getting a gross profit similar to the year 2021 compared to year 2022 because you had higher cost of sale. You had higher cost of sale in the year 2022. If you had reduced your cost of sale, by maybe 50,000, you could have got a gross profit of 100,000. So for you, in order to make a decision, or for the purpose of making a decision, we need to analyze the financial statement. Okay, we proceed and say there are some components. There are several components of financial statements. There are several components of financial statement as listed below. So we can have one. Comprehensive statement of comprehensive income. Statement of financial position. We have three. Statement of cash flow. Statement of cash flows. And then we have 4 class. Statement of changes in equity. Statement of changes in equity. Then we have 5. We have 5. 5 is the notes to financial statement. You can say notes. Notes to financial statement. Then we can proceed and say there are some tools used in analysis. Tools used in analysis. Tools used in analysis. Tools used in analysis. Just this. So tools used in analysis. We have 1, ratio analysis. Hizi ni kama methods. Ratio analysis. So under these, you say that it refers to a financial relationship. It refers to the financial relationship between 2 or more. Between 2 or more. Financial relationship between 2 or more entities. between two or more entities, between two or more entities. So under these is where you are going to find something like liquidity ratios. You shall be using liquidity, computing liquidity ratios. Liquidity ratios always are used to show whether the company is able to pay its short-term debt. Used to show whether the company, I hope it's visible, yes, whether the company is able to pay its short-term debts. Short-term debts is short-term. It's short-term. Let me write here. Short-term. Able to pay. Hope you have written down there. Or should I write? I don't know. Need to adjust. Okay, are we through up to this point? I just want to put the camera so that you can be able to see up there. Are you through up to this point? Please confirm for me. Okay, this is Grace. Grace seems to be very fast. Thank you very much. So when you hear of a liquidity ratio, this will help you to determine whether that company is able to pay its short-term debt. When we are talking of short-term debt, these are debts that are payable within a period of how long? Short-term debt. When you hear of short-term, long-term, how do we differ? 1 year. Thank you very much. Yes, short-term debt are payable within a period of 1 year. Long-term liability are payable within a period of more than 1 year. Thank you very much. So that is it. All right, I think that is in order. Just adjust a bit. To pay its short-term debts. So when you hear of liquidity, we are talking of ability of a company to pay its long-term debt. Ability of a company to pay it maybe short-term debt. Then we have efficiency ratio. Efficiency ratios. Who can tell us efficiency ratio nazo zinatumika kutuonyesha nini? Efficiency ratios. And then the other one is activity ratios. Like the way we have said that liquidity ratio zinatuonyesha whether the company is able to pay its short-term loans. What about the efficiency ratio? So because I need you to grow, go and check this and check this, the two. How do they relate, or what do they show? Or someone can just check maybe from the Google. You can just check from the Google and tell us efficiency ratio inajaribu kupima nini kwa kampuni, inapima nini kwa kampuni. You people, you are bright. I know you are able to tell us that. I give you some few minutes to do that as we proceed. What are some of the limitations of ratios? Because these ratios zinakuwa na limitation of ratios. Limitations of ratios. Limitation of ratios. So when you ask about the limitation, we can say that ratios are historical in nature. Ratios are historical in nature. Ratios are historical in nature. So they are computed using historical data. Computed using historical data. I'll show you all this. How do we compute the ratios? I'll show you. Historical, using the historical data. Two, another limitation of ratios is that they ignores qualitative aspect of the entity. Ignore qualitative aspect of the entity. They ignore the qualitative aspect of the entity. So it can go with the quantitative. We shall go with the quantitative. Then they are highly influenced. Ratios, they are highly influenced. Ratios 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 are highly influenced. We have checked. Nani ameangalia chenye tumesema? Nani ameangalia chenye tumesema? Ratios are highly influenced. Then the next term, this is one. Number two. Tool number two is the common size analysis. Common size analysis or vertical analysis. So this is a very interesting tool. And examiner pia anapenda kutumia hii. We find that we are going to look at that income statement in a vertical manner, that a balance sheet in a vertical manner. But there's something I would like you people to get here. There's something that I would like you people to get from the word go. So in the income statement, we express the items as a percentage of sales. We express the items as a percentage of sales or revenue. Very, very important. Very, very important. So the revenue, this is in terms of our income statement. The revenue in this case, revenue act as a base figure. So we express the items as a percentage of sale. We express the items as a percentage of sale in regard to what? In regard to income statement. When we are analyzing the income statement using the common size analysis or vertical analysis, We are trying to express the item as a percentage of sale or revenue. And that's what we are stressing in here and saying that the revenue acts as the base figure. Please, if you have a highlighter, I told you people you should have your own highlighter, either a yellow highlighter or a green highlighter, depending on your favorite color, so that you're able to underline these. These are very, very important terms for you to remember. That revenue always acts as a base figure as far as common size analysis is concerned. Are we together? I'll show you how or what I mean by revenue being the base figure. See in a chart here, I don't know. Efficiency. This is very good. This is a code. You can pick these. Measures the efficiency of the farm operation. Okay. Efficiency. The term efficiency inamaanisha namna gani? Kurahisisha, kurahisisha. How farm is better in its operation. Okay. Thank you very much. For example, let me now maybe show you how we shall be doing this. This is who's limited. Let me see. This is huyu sasa tuko na nani? This is Morris Limited. Hii ni kampuni ya Morris, 2021 financial year and 2021 and 2020. 2021 and 2020. I can as well use 1 year, no problem. So revenue ama sale. Remember, ikisema revenue ama sale ni sawa. Hapa tulikuwa na 1000. Cost of sale nilikuwa na 500. Sasa hapa nitakuwa na my gross profit. Gross profit will be this just illustration, sijui kama mnaona. Oops. Just illustration, sijui kama mnaona. Oops. Wachana na hii, scrap this off. 2020 wachana kwanza, tuta compare baadaye. So my gross profit will be 500 because I just subtract this. Can't be having admin expense over 200. Any other item, maybe distribution cost. Naweza kuwa na 100. Wacha tusimamia hapo. Sasa when you are to analyze these financial statements, this is just a sample I'm giving you. If you are told to analyze the financial statement of Morris Limited in the year 2021, this is how you do it. As a percentage of sale. Therefore, any other item, we are going to use the base figure as that of sales. For example, in the revenue section, we shall now have the percentage. So I have 1,000 divided by 1,000 times 100. How much do I get there? Napata ngapi hapo? 1,000 divided by 1,000 times 100%. So revenue will always be 100%. What about the cost of sale? As a percentage of sale, it is 500. 1,000 is our base figure always, times 100, times 100. Give me that, give me that. What about the cost of sale? 500 divided by 1,000 times 100%. Itakuwa ngapi? Itakuwa ngapi? Itakuwa ngapi? Itakuwa ngapi? Imekuwa 200. 500 divided by, imekuwa 200, No problem with this. No problem with this. Just confirm. I would like someone else to confirm that. Tuko na 200, is it really 200? Napata 200 from Grace, no problem. 50%. Thank you very much. 50%. So I think our cost of sale and gross profit the same. 500 divided by 1,000 times ni rahisi sana, ni rahisi sana. Hizi vitu ni rahisi sana. So this will give me 50%. Na ni mkweli ukiangalia vizuri, I want you people to see the essence and what we are trying to do here. When you look at our gross profit is 500. Our cost of sale is 500. In regard of the sign here, you can see our cost of sale amount was equal to the gross profit, 50%. When you add 50% plus 50%, we get what? Our revenue, which is 100%. Which is 100%. We go to admin expense. Can you give me that of admin expense? Give me the percentage of that admin expense. We see there the ratio in regard to the revenue. We see that in regard 20% from 𝐂𝐚𝐫 is giving us 20% because she has appreciated the fact that you take 200 divided by base figure will always be revenue. Common. Look at the word here, common. Although another time examiner will tell you vertical. Common. So our sale, just revenue. Revenue is common in every item. But remember, we are talking about under income statement. Under income statement, revenue is common. When you go to balance sheet, get it here now. When you go to balance sheet, what do you think will be common? Our common base. What will be our common base? This is very interesting. This is very, very interesting. What do you think will be our common base when we go to balance sheet? Thank you very much. Yes, total asset will be our common factor. Total asset will be our common factor. Can you write somewhere down here? Can you write maybe below this, that under balance sheet, the common figure or the common or the base figure is total asset. Just write in your own words. So this is will be 200 divided by 1,000. Then you multiply by 100%, which will give me 20%. What about the other one? It's 100 divided by, for distribution, 100 divided by 1,000. Then you multiply by 100%, and you get the percentage. Thank you very much. Are we together? I want us, when we go to the question, it will be easier for us to analyze. That is what we're calling analysis of this financial statement. Are we together? Let's see the next tool. The next tool will be horizontal analysis. Financial reporting is very interesting. Very, very interesting. I love this. Horizontal analysis. Hope it's visible. Have to adjust a bit. Three. Horizontal analysis. Horizontal analysis. Kama ulikuwa unasikiza, if you are listening keenly, which other name did we give this? Which other name did we give horizontal analysis? Trend analysis. Thank you very much. Thank you very much. Yes, trend analysis. Wakati mwingine examiner atatumia hii jina. Sasa uchanganyikiwe sasa. Which is this? Which is? So you should note. When you hear of a trend analysis, examiner anataka kumaanisha nini? Horizontal analysis. Horizontal. Now we are looking at statements in a horizontal way. The trend, what has been there? The trend. So it is done to establish the direction. It is done to establish the direction. It is done to establish the direction, either increase in sale, either increase or decrease in incomes, financial statement items. Financial statement items. Financial statement item. Depending. So we shall be looking at whether there was an increase or a decrease. Whether there was an increase or a decrease in a certain period. Therefore, we should be comparing two periods. For example, or e.g., or 𝐴 Limited, financial statement year 2000 and 2001. 2000 and 2001. So in the year 2000, revenue, sema tulikuwa na revenue hapa, yeah, maybe 2,500. Then hapa tuko na revenue ya 3,000. Then hapa tuko na cost of sale, yeah, maybe 500. But tuko na 300. Then our gross profit itakuwa ngapi hapa? 2,000. 2,000 hapa itakuwa 2,700. So the first thing that you need to look at here is what is the increase or what is the decrease. Was there an increase or a decrease in the first year? Or in the first item, was there an increase or a decrease? 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 Call this, wanatuambia increase? Yes. So our 2,000 is preceding 2001. So our 2,000, we had a revenue of 2,500. We had a revenue of 2,500. But when you look at 2001, the revenue increased. The revenue increased to 3,000. What is the increased value? What is the increased value? What is the increased value? It is 3,000 minus 2,500. So there was an increase of how much? 500. This is the increase. What is the percentage increase? What is the percentage increase? What is the percentage increase? Can you compute for me? Percentage increase. Percentage increase is computed using the previous year as the base year. So 2000 will be the base year. So percentage increase will be 500 divided by 2,500 times 100. Now, sasa, I can see Grace is giving us 20%. Is there someone else to confirm this? Is there someone else to confirm this? Is there someone else to confirm this? Call still giving me the same. This is 500 divided by 2,500. And then I multiply this by 100. Exactly. I would like to get a third person. I don't want people to sleep. I don't want people to sleep. I would like to get a third person and tell us whether you are getting a percentage increase in revenue of 20%. 20%. The third person. You people don't silence. I like an active class. I like an active class. That person. Na kama una calculator, nunua mapema. Kama una calculator, nunua mapema. Thank you very much. 20%. You see how difference we have. Thank you, Dorothy. Esther, where are you? Where is Morris? Where is Marcel? Where is James? Oh, Marcel, I think you did not came in today. Okay. Where is James? Where are you people? Where are you people? So if you are lacking a calculator or any material that should guide you or maybe help you to study this, you should acquire one as soon as possible. Remember, semester imeanza kabisa. Hi, let's go to the next one. Cost of sale. What happened to the cost of sale? This is the cost of sale that we had at the start, 500. And then in the year 2001, we had 3,000. Did it increase or decrease? Was there an increase or a decrease? This is very interesting. A decrease. A decrease of how much? 500 minus 300. Irregardless, don't look at uangalie negative. Hapana, wewe angalia value. Hapa tunaangalia value. We are looking at the value, the item. What happened to the item? There was a decrease of 200. But for a decrease, I know that I should show it in a bracket. In that order. Now tell me, what is my percentage decrease? In fact, I'll put a negative in front. I can put a negative in front to show the examiner that is a decrease. Showing the examiner it's a decrease using a negative formula. Thank you very much, Dorothy. Thank you very much, Blaze, for your contribution. Now, let's see the effect of that to our gross profit. So there is an increase in our gross profit by 7,000. By 7,000 or 700. Sorry, 700. What is our percentage increase? As far as gross profit is concerned. So, you people, now, do you understand the difference between common size analysis and trend or horizontal analysis. Do you understand? Do you understand? Do you understand? I'd like to get that from you. Have you understood how we are getting this? It's very, very simple. It's very, very simple. What you have to know is whether the examiner wants you to give it in a horizontal way or in a vertical way. When you are giving it in a vertical way, always remember the base figure is revenue and the income statement. When you are in the balance sheet, the base figure is the total sales. That means total sales. When you are analyzing that for the total sales and the total equity and liability will be at 100%. Will be at 100% because it will be that figure of the total sale divided by itself and then multiplied by 100. Other item like revenue, not revenue but inventory, receivable, and so on, PPE, you'll be dividing them with the total sale times 100 to get the change, or not change but the percentage, the percentage. That is very good. That reminds me of a question that we need to tackle today so that we're able to there's a third one we can fourth one. This fourth one is not that common. Comparative financial statement. You can say comparative, not that common. Financial statements. So for this one, you'll be given, you will be provided, you'll be provided with two financial statements to compare. Financial statements to compare. You people, I shared a link with you for the past paper. By the way, I have to say this. Because it is very, very important for us. I'll resume my recording. Say that. So we are doing this question, May 20, not May, but a pilot paper from December 2021, question number 5. Pilot paper, December 2021. 2021, question number 5. Pilot paper. Good. So allow me to go through the question or lead the question. The management board of 𝐂𝐚𝐫 Limited is reviewing the performance of the company for the year ended 30th June 2021 relative to 30th June 2020. The company is engaged in buying and selling various agricultural products, and despite challenges in the operating environment due to COVID, the results for 2021 are better than those of 2020. The company has presented the following financial statement for the 2 years. 𝐂𝐚𝐫 Limited statement of profit or loss for the year ended 30th June 2020 and then 2021. That is very nice. We have revenue, cost of sale, gross profit, administrative expenses, distribution cost, profit before interest, finance cost, profit before tax, those are total, income tax expense, profit for the period, dividend paid, retained profit for the year, retained profit brought forward, and then retained profit carried forward. Statement of financial position 2020-2021. Non-current asset, property, plant and equipment. Current asset, we have inventory, receivables. We have retained earnings. That is, okay, bank, then total assets. Capital, share capital, retained earning, non-current. We have current liability, total liability, total capital, and liability. Prepare required. Prepare the following common size report. Wow. Common size report. Vertical analysis for the year 2020 and 2021 using revenue as the common base. Here they have told you for profit or loss and total assets. These are very good. Hata ini nyinyi mtafanya jameni. Common base for the statement of financial statement. Horizontal analysis using year 2020 as the common base for analyzing year 2021. Jameni. You people, do you want to try that? 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 Because it's just looking at the figures and understanding what we have said. Having the concept become very easy. Do you want to try that? Yes, from Dorothy, that is very good. I like the courage. Start the same. So, for part A, 1 and 2. Part A, 1 and 2 tafadhali. Wacha tufanye. Hiyo ni vitu yani rahisi kabisa. Ingine ni ya ratio, tutaifanya. So, let's have 10 minutes and do that. Dakika 10 tuharakishe, tumalize, tuende kwa trade, tumalize, and we are done. We are done. Hii concept ni rahisi zaidi. Let's do it. Let's do it. So let's proceed. Then we shall do it together. So we have said that. You said that. To make your work look smarter, you can have this. Naweza kuwa unakora hivyo. Unakaa smart. So revenue tumemaliza, we've seen 100%. Tell me what you got as a cost of sale. Cost of sale, mimi nitaandika 2 percentages. Cost of sale in 100%. Cost of sale. Value yake hapa tuko na 15,03,999. 15,03,999. Haya, tunapata percentage gapi? For 2020. For 2020, then 32,89,72. Tumepata ngapi? Tumepata percentage gapi hapa? Tumepata ngapi hapa? Ipeni hizi tafadhali. Taka 74.19, thank you. 74.19%. What about this one? This one? This one? Good to gross profit. Ingine 76.39. 76.39. I like this percentage. We move to gross profit. Gross profit is 523,311. 523,311. Then 1016,831. 1016,831. Gross profit ya hapa ni ngapi? Ya 2021. Gross profit. Before we move to admin expenses. Admin expenses. Admin expenses. 25.81. Thank you very much. 25.81. 0.81. I like this. So you are bright. What about this one? About this one? About this one? $25,600. About this one? 2361. 23.61%. 3.61%. We move to the admin expenses. admin expenses, I have that 328 to 50, 328 to 50, 328 to 50. Give me the percentage. 11.12. Thank you. 11.12. What about this one? We go to the other one is distribution cost. Distribution cost. We have 167,630. 167,630. Remember, these are cost. Therefore, ndio maana unaona zimewekwa bracket, tutazitoa. Okay. What about this one? It's a positive figure, Esther. I hope so. What about this one? For the 2021, mlipata ngapi hapa? 7.62. 7.62%. That is very good. We move to this distribution cost. Distribution cost year 2020 ni ngapi? Distribution cost 8.27. 8.27. I like the speed. Sasa nyinyi mmeanza na speed ya juu vizuri sana. Hii ingine ni 267,800. 267,800. We said this is a cost, so we can put it that way. 6.22. 6.22%. So 6.22%. Now we can get, I think this is a profit before interest. Profit before interest. Profit before interest. It will be the difference between the two. 130,081. 130,081. 130,081. Na hapa tuko na ngapi? 130,081 na 427,81. 427,81. So nipatie pia percentage ya hiyo. 6.41. 6.41. Ni watu. Uko sawa kabisa. What about the next one? 9.77. 9.77%. We move to the interest. Finance cost. They are calling it finance cost. This is very interesting. Finance cost. 44,600. 44,600. And then for this period is 108,399. 108,399. Patia hii 2.20. Okay, 2.20. Finance cost ya hawa. That's year to that. The other one, can we round off instead of decimals? No, it is good to put the decimal, but you can as well put it in one decimal place. One decimal place is also okay, don't you? One decimal place. You can put it in as one decimal place. Is that okay? Maybe 2.2. One decimal place is okay. Sawa. What about the finance cost for 2021? Ningapi. Finance cost for 2021 ningapi. Profit before tax is our next. Profit before tax. This will be given by the difference. 2.52. 2.52. So unaona sasa ukiweka hivyo unaona difference. Sababu kuna ingine itakuwa, because you are trying to analyze even the smaller beta, the smaller difference. Unaweza angalia even the point something. So profit before tax for this, I'll be having 85,481. 85,481. Then I'll be having the other side, the 312,382. 312,382. Nipatieni hizo. Tunapata ngapi? For 2020. 2020 kwa ngapi? 2020 ni ngapi? 4.22. 4.22%. The other one ni ngapi? Yeah, 4.2 is okay. One decimal point ni sawa. Income tax expense pia 7.25. 25%. Income tax expense, income tax tunatoa. Income tax iko hapa. Income tax tuko na 26,400. 26,400. The other one we have 52,500. 52,500. 52,500. 52,500. Therefore, give me the percentage of this so that we can get for income tax. Now we get the profit for the period. Profit for the period. I'm going to adjust the board. Profit for the period. For period. Period. Profit for the period ni after you less the tax. Na tunapata nipatieni hizi tax percentage yake. Percentage yake ama ndio hiyo. Is it that one? 4.2. Tax ya hiyo. Tax ya hiyo ni ngapi? Hope ndio hiyo tumepewa. Okay, 1.3%. What about for the other one? For the other one ni ngapi? For year 2021 tax yetu ni ngapi? Then tupate hiyo difference hapo 59,081. 9081. We are finishing up this 1.2%. One decimal place iko sawa kabisa. 59,081, 259,882, 259,882. Haya, patia hii ya profit for the year, napata ngapi? Profit for the year, percentage as a percentage of revenue. A percentage of revenue, profit for the year mnapata ngapi? Then you go to dividend, of course. Go to dividend. You go to dividend. Details. And then you have 2020 shillings in thousand. Then percentage of revenue. And then you have 2021 shillings in thousand. And then some percentage of sales or revenue. Haina shida. Haionekani 2.9 hapa, 2.9 napewa 2.9%. What about 2021? 2021 ni ngapi? 2021 ni ngapi? Tafadhali atie 2021 as I adjust this one. 2021 ni ngapi? 2021 ni ngapi? 6.0. So you can see the profit for our 2021 equal juu. The profit. When you compare, when you are analyzing, you look at this. How is my, okay, this is revenue ni sawa, ni 100%. Let's look at cost of sale, 74.19% or 74.2%. And then we have cost of sale of 76. So this one, we had more cost of sale compared to year 2020. And then we go to gross profit. Gross profit for year 2020 was higher compared to gross profit of, that is the way we analyze. This. Dividend paid. What is your time? It's time. Time imefika. Dividend paid, you people, I know you have it. That is the way we are doing this thing. 28 dividend paid ilikuwa 3,500. I don't want to take much of your time. Then we have 65,300. That one. Give me the percentage of our dividend paid. 28 581. Give me 1 minute. 194 582. 582. Dividend ni ngapi? 1.5. Thank you. 1.5%. What about for the 2021? This is now retained profit for the year. Retained profit for the year. 1.5. So what happened? 1.5. Are we together? For 2021, 1.5. 1.5, right? So dividend paid was the same, took the same percentage. I hope that will be the right position. And then we can we add the retained profit brought forward. Retained profit brought forward of 329,769. You can as well get the percentage of that. 358, 350, 358, 350, You get the percentage of that. So this is 1.5%. I hope you people, 1.4, okay? 1.4. So there's a difference kidogo. Higher. Then you get that, and then you get retained profit, profit carried down. Profit carried down of 358. What about this percentage? 350. 350 done. And then 552, 932, 552, 932, 932. Oh, it's 1.5. So both are 10 profits for the year, retained profits, 10 profit for the year, or 1.5. Oh, Grace, or 1.4. 1.4 is the retained. So our dividend is the same, huh? Dividend is the same, 1.5%. So this is 1.4%. What about for this? For this? We want to go for work now. Nataka twende kazini sasa. 4.5%. 4.5%. And then you look at the retained profit brought forward. Percentage yake ilikuwa ngapi? Retained profit brought forward. Pata ngapi hiyo? Pata ngapi? Pata ngapi pale? 16.3%. And then the last one. The last one sasa tumalizie ili tuone profit yenye ilikuwa sawa. You people have tried, 8.3%. 8.3%. Sasa nikiangalia what about the percentage ya hapa? Chatumalizie tu. Chatumalizie 350 divided by our revenue is 310. Then 17.7%. 8.7%. And then the other one, the last one, 552, 932 divided by 430, 65, 33. Kwa ngapi? 12.8%. 12.8%. So at the end, you find that our profit, retained profit carried down for year 2020 is higher in the percentage form compared to that of the year 20. But they have you computed very well this one. You computed very well. You'll check, and then do for me the balance sheet. Analyze for me that of the balance sheet, and then do the common size. Do the common size for the same. Do the common size. Then throw them in the group. Discuss there, and then in our next lesson we are going to complete that and do some other few examples, and then we will be done. Is that okay, class? Is that okay? Sorry, I've taken your 5 minutes. Huwa tunaingia exactly 5 a.m. So let's always wake alarm maybe by 4:40 ili tunaweza kujipanga na our uso and such. So do that work and then throw it in the group. You people, you should discuss from now. Na unatafuta swali ingine. Hizo past paper, angalia maswali zingine under this, an attempt. That will really help you in moving under this. Otherwise, thank you so much. I wish you all the best. Good day.